Good morning, everyone. Welcome to TopstepTV, the London session, with myself, Deeyana Angelo, aka Marcus Talker D. We're going to be looking at platinum today. I'm going to leave copper alone because that's kind of started to partially roll into the next front month, which is February. So we're rolling straight into February. And if I show you this, you will see that the volume is kind of split. Hold on, let me do this. The volume is kind of split between December and, March. So they're trying to roll it into March. And I can see that on the main contract in Topstep, they've already rolled to this HGH symbol, which is not human growth hormone. It is copper. However, if I go to micro copper, that's still on December. So there's a whole bunch of weirdness that might split volume and usually doesn't bring that great of an opportunity because of the split volume, right? So I'm gonna leave copper alone and instead I'm going to focus on platinum. So let's see what's going on in platinum. We do have a pretty good down movement from Asia. That movement exceeded the average daily range and now retested it just before I kind of came on to this stream. I've been tracking this as I was getting ready. So if we take that the back test of GEX1 level and also the exceeded ADR can be used as a level. We now have a bearish engulfing from there, which is a 2-bar reversal, something that I like using on slightly larger time frames, but also on lower time frames. We can also see that 15-minute chart has a reaction from a supply where we kind of started around before going lower. So to me, that will be a short, right? So I'm going to try doing just one contract in platinum short. And the target for this would be closer to this 950 level. However, I'm still going to stick to my 76 target if we can get there. I'm not going to ask for more. Now, if you're here for the first time and you have no idea who I am, I've been trading for 17 years. 12 years out of that, I've been trading futures. And most recently, I actually did pass the Series 3. It's my second qualification that I had over the years, but the first one I didn't really use, so I let it expire. So I'm quite pleased to have an active qualification again. Take that as you will. But, you know, it's a useful thing to know how the futures markets operate. It's not going to help you to trade profitably in any way, because that's a completely different thing. But it might give you a better understanding of why some of the products behave the way they behave, right? There's a lot of hedging stuff that goes on with the products that we trade here. And for the most part, people, you have like blinkers on and they just, you know, they don't really understand why certain moves happen, how the, how the fixed income relates to equities and all of that. So from that perspective, it's nice to know about those kind of interrelationships between different products and also why, for example, silver and gold might correlate sometimes, or something like why is it that gold skips a front month every so often. So all of that is pretty useful, but it is a challenging exam. You know, it's not something that you can just sit overnight if you've never really traded that much and then pass it. It's a bit of a, you know, they will throw trick questions at you. So you really have to think. But, you know, I enjoyed it. It was a challenge. However, it's pretty good to get that out of the way now. When do I decide to stop trading for the day when ADR is hit? No, the ADR has nothing to do with it. When you should start trying to think about stopping for the day, making the executive decision to not continue, is related to either the number of trades that you've done, or when you reach your daily loss limit, personal daily loss limit. So when you basically run out of money, run out of budget on the day, or you've reached your target for the day. So if you have neither of those, that's a problem. You cannot expect that the market is going to tell you when to stop trading. That's a terrible way to do things, right? Because you're going to give it all back. So first and foremost, this is such a loaded question, right? So first and foremost, you need to know what times of day you excel at, not what I excel at. That's going to be different for everybody, right? So let's say that you're really good at trading Asia, slow markets, right? I'm not that great at it, right? I have traded it, but that's not like my prime time of day when I excel at trading. And let's say that I am itching to do a trade, which I don't really, but let's just say I'm a little bit more novice and, it's Sunday, the markets are open, I'm itching to get into a trade, and I do a few really bad trades. Should I carry on for London and New York? No, because you've already dug a deep hole for yourself. So at that point, it's best to just give up and go, okay, messed that one up royally. Let's do something else. So carrying on trading for the day needs to be done in relation to your own performance, in relation to how you view the markets, your personal goals, but those goals do need to be managed on an account balance basis. If they're not, if you're just managing it based on whatever the maximum loss limit they give you, you won't last long. So some of the guidelines that I like to put in place is to never really use more than about 3 to 5% per trade. But again, that will vary the more you trade. So I'm somebody who doesn't do that many trades per day. However, if you came to me and you say, well, I do 10 trades per day, you can't be using 3 and 5% because you're going to dig a hole of 30 to 50% of the maximum loss limit before you build a buffer, right? Once you've built a buffer, we can then talk about how much buffer is there and what should your daily loss limit and profit goals be based on the account balance. But what I see people doing over and over is that they take whatever they've got and, maybe the old daily loss limits that we used to have, and they're like, well, I'm just going to risk 1,000 a day. That's not great because you're basically working on a 50K account. You're basically working with $2,000 as like your initial working capital. And then once you build that, you can absolutely, change your goals, but until you have a profit buffer, there's just no point, right? Otherwise, you're not really making system design stable enough. So your system won't be stable enough. It will have a very high risk of ruin, which is basically how many trades will you need with a particular set of your profit factor and the average accuracy that you have. How many trades or how much time is it going to take you to blow it? That's what risk of ruin is. And, if you're using 10 to 20% of your account balance or available maximum loss limit, which is your account balance basically, and then you're aiming to make 1,000 or 2,000, which is effectively 50 to 100% of the account balance. Like the numbers are just, mind-blowing. So that's kind of YOLOing it for me. So basically what I do, I try to take in the account balance into consideration. I will use about 3 to 5% per trade, depending on the quality of the setup, which again is taken from some of my performance, my personal performance details. The time of day when I'm trading comes into that. And then if I can make 10 to 12% on a new sort of account, I'm happy with that, right? But the bigger the account size, the lower the profit goal and percentages goes, right? So if I am working with a 600,000 account, I'm not going to have, I'm not going to be shooting for 10%. That's just like lunacy. So, whenever I have positions that are catering for the larger account sizes, we're talking, 3 to 4%, maybe like 8% on an exquisitely great month, like not a day, but a month. Okay. So, that's just me though. However, there is definitely something to be said for the prop accounts and for people sizing up way too soon. And I especially see that when people take a payout and then right after that the account is gone because they keep trading with the same size. Some of them even size up to get back to where they were pre-payout. All of those are not good trading practices. Now, when to stop trading? Well, when you hit either your designated profit target or your designated number of trades per day, which is my personal favorite, or when you hit your personal daily loss limit. That is, supposed to be like a normal sort of, 2R. For me, let's say that I'm using a 50K account. This is the live account, so that's a little bit different. But let's say that I'm using a 50K XFA. And I'm doing $175 per trade. So I will stop after 3 trades lost, right? Because if you keep going and you keep losing after that, you're just going to put yourself into a very difficult position where you will need more than 3-4 trades to actually get back to scratch. So I have a long-standing accuracy of 43%, so not every trade that I take. In fact, most of the trades, or over half of the trades that I take, you will see me lose. Why? Because I'm aiming for the 2R multiples or 3R multiples. So I maintain my profit factor, which is usually around 2R. But sometimes it goes down to 1.7R, sometimes it goes up to 2.3R, again, depending on the opportunities that have presented themselves on that particular, for that particular time period. So, accuracy for me is not really a big deal, and I found a way to be perfectly okay with a medium accuracy, but a higher risk reward, which for me has led to much more profitability over time and stability over time, which is something that is really important to me. Consistency, profitability, staying in the account for a very long period of time is my primary objective. It is not to make as much as possible, because that's never the biggest, best goal to have, because usually those people who rush, they just keep blowing out and they just keep getting new accounts and then blowing out and getting, all because they're rushing. So if you slow down, you size down, you take it slow, take those 200 to 300 days and be happy. I see people get to 600 a day and then they keep trading and then they're down to maximum loss limit or at the very best, like dug a huge hole, right? We don't want to see that. Nobody likes doing that. It feels disgusting, right? You feel disgusted with yourself. let alone other people looking at you trading. So, if let's say that you do 3 trades in a day and all 3 of them do well, you get maybe a partial profit in one, you get a full profit in another one, maybe a small loss in the third one. Just stop. Okay, just stop for the day. So that would be like my way of doing it. Some people like to have a monetary value. I don't like monetary values, okay? I think it puts you onto that whole trading the P&L way too much. And it's detrimental and it's not scalable, If you're used to trading really small accounts and then you suddenly get to a point where you've copy traded 5 XFAs and suddenly you have a $100,000 account balance and you're trying to trade one, you're like, you're trying to trade one account, what's going to happen is that your brain will be unaccustomed to the big P&L size that is now kicking around. This is why I keep I have different account sizes, right? Whether it's our company account, whether it's my own account, whether it's these accounts, they're all different sizes. How do I stay consistent across them? Well, I use ticks and I use percentages. I don't use dollar amounts. I don't care whether I make 100 or, $4,000 on the other account, because to me, it's all in ticks. It's all the same thing, right? So you have to make your system scalable so that you don't freak out when you get to bigger sizes. And that, if you're staring at the P&L, that inevitably brings a mental adjustment with it. And then you're going to be, or, let's say the other way around. You're used to trading maybe a bigger size in your personal account, but you're sort of taking it slow in these sort of 50Ks, XFAs. So suddenly you're used to making, 1,000, 2,000 in your personal account, and then you start shooting for the same thing while trading micros in a 50K. That doesn't compute, right? It's never going to work, because you would need so many more ticks to get there via micros. It's not scalable. So this is why looking at this trade, for example, it's 35 ticks in platinum. Whether it's a size 1 or 100 or 50 or 2 or whatever, it is still 35 ticks, right? So try to look at it that way. So designate your profits and your drawdowns in a scalable something, and then stick to it, right? We have the personal daily loss limits in the XFAs. We don't have that on the live because the risk team actually takes care of that for us. So if you want any sort of a change, you have to call them up and go, hey, can you do this? Can you do that? But we have a lot more flexibility, right? We don't have the fancy analytics tools on our lives either. But like I said, if you, for example, want to, Bernard, no, do not open windows. I have a dog who likes opening windows. And then he barks, obviously. Doggy TV. Yeah, so let's say that I don't want to trade a particular session. I can actually call up, make Brett or Ben and go, hey guys, can you log up my account from this time of day up until this time of day? And then they do it. So it's almost like having that personal lockout that we are actually rolling out for everybody. So if you saw Michael Patak's tweets over the weekend, he said that on Monday we will be rolling out the new risks tools for the XFAs. And it's awesome because you will have that shot clock that Rips has been talking about forever. I actually have that on some of my other platforms that I use. And it's great because if you don't want to trade, like for example, I suck trading the lunchtime in New York. So I will always lock myself up. So I can carry over a position, but I cannot initiate new trades. So even if I forget to look at the time of day and, I try and click and enter, everything is grayed out and I'm like, oh, and then I look at the time of day and I'm like, oh, of course, it's lunchtime. And then I can go and do something else while I maybe manage an active position. But if I don't manage to find a position by New York lunchtime, the risk system is going to prevent me from going in, right? So you can do that even in the live account. So don't be afraid of, being moved to live and whatever. If you do get moved to live, that is actually an amazing achievement. It means that you're getting a real trading partner, in the form of the risk team. And regardless of what people may think of them, I will tell you that they're actually all traders, all former traders, and they all know what they're talking about. They understand when you're struggling. They can give you some pretty nice pointers, and you don't feel like you're alone. Like I myself, I've called up Mick a couple of times and, really kind of poured my soul out, and we talked about a whole bunch of stuff and strategy and when to scale up, when to scale down. And it's really nice. It's nice to talk to someone who actually understands the business. Rather than like your spouse or your kids or, just putting it all on them. That's what the risk team is for, right? And they're more than happy to work with you to get over any sort of funded account jitters and, whatever may happen. Okay, I'm going to drop down to a 100 tick chart here just to see what's going on. But so far we don't have that big of a traction, which is a feature of this time of day. But yeah, we'll see. We'll see. It hasn't gone up, it hasn't gone down, so I suppose that's, for now, still undecided. I want to see this obviously go below this ribbon. For now, we are just a little bit flat, but there was a little supply that is visible on a 30-minute chart. So let me jump to that quickly. So if I show you this, there is a supply, like I said, ADR low was exhausted there. And to go back to that question who said, oh, do you stop when the ADR low is exhausted? Well, no, because you have days like this, which are abnormal days. They're outlier days where there is a higher chance for a single direction day, right? So you don't stop, especially not if the ADR is exhausted immediately at the open. It just tells you a different piece of information, right? It tells me that we do have a higher chance of this turning into a single direction day. Therefore, for now, until proven otherwise, so until some structure to the upside gets broken, it means don't go long, right? That's all it is. But it's certainly not a gauge for when you should stop trading. All right, let's rattle off some questions while I wait for this platinum to make up its mind. And again, reminding everyone, 43% accuracy. So, aiming for the larger risk reward, which means that more than 50% of my trades you will see me lose. Okay, so don't freak out. I've had a Twitter troll yesterday that I had to rattle the cage a little bit for him because he was being quite nasty, and yet he's a new trader. So I decided to give him a bit of a dose of his own medicine, which he didn't like particularly. So he got really rattled even more. And then I blocked him. So that's the end. But yeah, so whenever you see people with higher risk rewards, we will always look like we're always losing trades, right? Because we're looking for those bigger opportunities and we're not afraid to take a few losses in a row in order to get those bigger opportunities, because they then account for all of the losses and then some. Now, I'm somewhere in the middle, right? You have the extremes like Dakota and Rafa that have 20 to 30% of accuracy, but then they shoot for 8, 9, 10 R multiples. Now, obviously, you're not going to get those every day, and that's why you will see, loss, then a big day. So if you can't handle that emotionally, that's probably not the way to trade for you, but it absolutely works for a lot of people. Now, like I said, I'm somewhere in the middle where I aim for anywhere from 43 to 52% accuracy. And I have had weeks when I'm smashing it at 85%, okay? So there are days like that, but that's not like the norm that kind of carries over all the time. So also my complete comfort zone is to look for the larger moves. So I would be looking for 2R and 3R multiples to come my way. And then every so often I actually manage to do a 5 and 6R. But that's not something I look for on a daily, sort of a daily, everyday sort of occurrence, have to have 10R, right? No. So 2R multiples for me more than enough as a default. But if I see a mean reversion opportunity that has gone, broken the structure to the other side and we're going, I may increase my risk reward. So it will be a case by case basis. When you're saying you're risking, so when you're saying you're risking 2 to 3% for like a 50K account, that's like having a risk of okay, here we go. Guys, 50K is a nominal risk value. You're working with $2,000, okay? That's your starting point. Never mind the 50K. That's based on the amount of leverage and the amount of cash that you would need to have if you were going to risk $2,000, right? So 50K doesn't come into this equation, right? 2,000 is what comes into the equation. So what is 3 to 5% of 2,000? Let's have a look, right? So let's see how wrong people get this, right? Where is my calculator gone? It's over here. Okay. So 2,000 times 0.3. So that's up to 600, but that should be per day, right? Not per trade. So if we're doing, sorry, that's 30%. Yeah, too early in the day. 0.0. So 0.03, right? 60 bucks, right? 60 bucks is what you should be risking. Maybe 75, right? Maybe 75. Let's say 75. That's about 5%. So this is like this is the debate that I've been having from so many people. They're like, oh, but it's only $60. Yes, but you only build that up for the first few days. And why do you do that? Well, because otherwise, to spend 2,000 as a working capital in your own private brokerage, it will cost you 2,000. It won't cost you 49. Or it won't cost you, let's say we take in the live activation fee as well. So it's not going to cost you, $198. It's going to cost you $2,000 of your own money. So that's why we do it, right? That's why everybody who went into prop saw the opportunity to remove risk to your own capital. That's, higher leverage for peanuts is what draws a lot of us in. That is, you pay a tiny amount, you get a lot of leverage. That's attractive to me as somebody who is a risk manager and I want to remove risk to my savings at all points. That's something that's attractive, right? You can think of it differently, but then those kind of people usually spend their own 2,000 and then another 2,000 and before you know it, they've spent 10K of their own money. Well, I'm over here, even if I mess it up, I'm spending $49 a time. So to me, that's much better. I'm just going to let my cavalier out of the room because he's scratching and he's deaf, so I can't communicate with him. All right, only one dog now. Okay, let's see. The Ming Tring says, hi, Dee, do you recommend not trading rollover week at all? Well, I traded the rollover week, didn't go so well. I would say that whenever you're looking at something that is in rollover, it's just weird, right? So I was looking for some trades, like whether I was looking for continuation or reversal, it just nothing works, right? It was literally just a whole bunch of nothing. And I mean, if you can, just avoid the products that are rolling. So that to me would mean avoiding copper until it rolls. Now it's a little bit tricky because we were in December, and typically what tends to happen is that they wait until December to actually expire. And now they're rolling into March. So when this rollover will be complete, I have no idea. So that's why we have to keep an eye on the CME website to see when that volume completely rolls. But yeah, I don't like trading rollover weeks because they're always a bit sucky. This is why I've decided to trade platinum, because that's not in rollover. Everything else is. Gold has started rolling slowly. Copper is rolling. Crude oil is finished rolling, but it's not really doing much. And to me, crude oil is just not consistent enough for this time of day. Like one day it moves a lot, the next day it doesn't move at all. Then we have a week of nothing, and then we have a week of craziness. I have the edge on crude oil after 9 a.m. Central. So much, much later in the day. Much, much later in the day. Okay, let's have a look. Can you show us the short call feature? No, I can't because I'm on my live account as per orders from headquarters. We don't have that. So we do not have our features. We just have the basic risk thing. So a whole bunch of nice stuff that you guys get on the XFAs. We have that. And I do have, I still haven't been transferred to live, so I do have the XFAs, but we were asked to only use our live accounts on these streams, on Topstep streams. So obviously orders from headquarters, I have to follow. But yeah, so I can't show it here, but they will probably show it on the main broadcast. I haven't tried it yet, so I was getting ready for this, and once I'm off the stream, I want to try it myself, and then it's going to be fine. So yeah, but until I test it myself, I don't want to fumble around and just look like a muppet. It's like, how do you use this? No. But yeah, I think you can lock yourself up on the live as well, but again, sometimes on the lives, those features need a little bit before they're working properly. Someone is asking if I cannot bump up the volume, guys. So if I show you how loud I am over on my side, so this is gonna be a little bit weird, but there you go. My volume is ticking up to about -10, right? Now that is very loud for speech. So I cannot bump up anything more without starting to go into an overdrive. Now, I'm someone who absolutely despises audio problems because I used to be a music producer, and bumping up the voices to go into the red to like -5 decibels and stuff, it's just absolutely, like, to me, it's like cringeworthy every time I see that. So, yeah. And so Bruno is saying, personally, I'm at 50% of my computer volume and it's fine. So maybe some of the laptops and stuff, I know that they're not the loudest. I can't really help that. And for the sake of everybody else, we want to keep the audio clean. I also have a limiter that makes sure that I'm not going into the red and that I'm not blowing up into the microphone. But yeah, everything is, the gain is, is appropriate, man. So I don't know what you want me to do. I can shout. You want me to shout? But I don't think nobody wants me to shout either, because that's not very nice, right? Yeah. So let's carry on. Volume issues aside. Where do you find put support data for Platinum? Interesting stuff. Mental Q. So you can go to like bar charts and just look at the actual outright options data. But obviously, because I have quite a few things that I'm looking at, like I'm looking at 6 or 7 things. Sorry, Bruno. Bruno said I scared him. I apologize. Yeah, so I look at about 6 or 7 things because obviously I have the coaching service. I trade DAX. I trade 3 or 4 things depending, not all on the same day, obviously. But yeah, depending on which one looks better, I will use that. So I use Mentor Q's query bot to find the levels. Apparently I'm an AI. Okay. Yes. So yeah, so most of the people are saying that the volume is fine. Somebody's saying I'm on an iPad, it is fine if you have volume issues on your side. Yeah. I'm sorry, guys. I'm sorry if I woke anyone up. It's it's didn't mean to scare anybody. Yeah, it was just a joke. All right, so let's have a look at some other things. I can see that for now copper is kind of following platinum, which is odd. I have frogs in my throat. Good morning. Good morning. But yeah, copper to me still just looks very, very range bound. What is gold doing? Not much. Yeah, so I still think platinum is probably the best thing. We are coming into the initial balance high now. And this could be a bit of a decision point. So let's see. 956.6. That is the initial balance high. Let's make this like red or something, so that we delineate properly from the rest of it. Oh, I didn't change it. Why didn't that change? There we go. Because I changed the text color. That should still be yellow. There we go. Initial bounce high. Now we are getting a little bounce from here. So we need to see what happens here. Because if there's no breakdown around the initial balance, that is going to mean more upside. But having said that, during this time of day, we could have some time before we decide. So I don't know whether this is going to happen during the live stream, the decision. It might, but usually things slow down before the overlap and then they make a decision. But let's see how they play it here. I have the 100 tick chart. I have my ribbon. We are about 10 ticks in profit. Not not enough for me to say that this is like a safe trade. So I do need to see that breakdown into the initial balance high. And let's wait and see. Patrick P says, Dee, can you explain how you use volume profile and the DMI indicator? So for me, volume profile is more of a trade management tool. I do look at it on very large time frames as well. So if I go to a daily chart, you will see that we're currently in a very thick volume area. So that is not that helpful. And that's when I will go back to my supply and demand analysis, where I will say that there's a demand around 943.7 and that there is a supply around 973.8, which we're bouncing from. Also another reason for a short. So until we kind of get back down to the area around the 943 level, from a larger standpoint, this is a short, right? But that's not how I necessarily use volume profile. So the volume profile for me, yes, there is a use on large time frames, but here is how I like to utilize it instead. When I'm on a very low time frame or on a 100 tick chart or looking at bookmap. So to me, 100 tick chart while I'm doing this is kind of the replacement for bookmap, so that I don't kind of jam everything into the one screen and give you a whole bunch of information overload with discretionary tools and blah, blah, blah. This is a better way, because on a 100 tick chart, you can see a similar amount of movement, but remember that I also have like equivolume candles in Ninja on another screen. So for example, if let me just find platinum. So I have these things as well on a 2-minute chart, right? For now, you can see that the volume is just, I don't think I'm hooked up to anything right now, but you would see that the volume is either increasing or decreasing depending on what these candles look like. And then you can see the strength. But basically, that's what bookmap does. It kind of smushes all of that information into one, rather than, looking at volume candles at the bottom, then looking at this. Now, the DMI indicator is supportive of what I'm seeing in the volume profile on very low time frames. So right now, to explain what I'm seeing that we're below the visible range point of control. I'm seeing that we built up some profile and volume around about that same area, which obviously brought the point of control to this 959. What I want to see now is that we stay below the ribbon and below the volume POC. I also would like to see the breakdown around the initial balance high. So again, it's not a separate measure. It's all an extension of both. You can kind of look at it as a living, breathing mechanism where all of the parts need to fall into place in order for the puzzle to be complete and to get the setup that you want. If at any point of my trade management, that one piece of the puzzle starts to break down, it means that the price is not doing what it's supposed to be doing. So for me, it's a part of an OODA loop or of an OODA loop, observe, orient, design, and act. And it's a very systematic way of doing it, right? So I want to see the volume point of control move down with this move. If it doesn't move down, it means we haven't had a meaningful enough move. Even though it's in some profit, that's not what I want to see. I want to see a committed sell-off at this point. When it's going to happen, nobody knows, right? And this is where, you sit and you monitor your position. If the volume profile keeps slipping higher, that's not a good thing. You need to bail out of the position. But if it continues to either hover at the same place, you do nothing. If it starts to go down, that's a good thing. But then at the same time, you need to make sure that the price is below the POC for the shorts, and obviously vice versa for longs. Once you get what you want to see, you also need another area to track how you're doing depending on orientation points. And all of my orientation points are either, edges of initial balance, so that first hour of trading, or some sort of options levels, or the distribution curve from the previous day's trading if it's somewhere around. Today it isn't, so the value area is not in play yet. Neither is overnight VWAP, we're far below it, which does introduce a little bit of a problem because we could have the mean reversion all the way up to VWAP before we do anything. Now this is where maybe an anchored VWAP might help, right? So you could anchor it to the low of this move or to London Open, depends on how you want to do it. I know Coach Ray anchors it to the London Open, so maybe we can do that. Let's try and see whether that's going to give us some more information. So the London Open was this candle, so 956.2. And I'm going to do anchored VWAP. And I'm going to plop it there. Okay, so I'm just going to change this to close. Let me just do that. No, that's the line that I was using. Hold on, let me try and grab it this way. Okay, so here we go. So I'm going to use the standard open, high, low, close divided by 4. And there it is. And then go back to the 30-minute chart. So what do we make of this? Is this a VWAP pinch? So we have London Open, anchored VWAP at 955.4. We have overnight VWAP at 961.5. Well, according to Brian Shannon, who is the VWAP father, he popular godfather, let's call him, he calls this the VWAP pinch when you are in between the two VWAP points, right? So right now, I am using my own levels to figure out whether this is actually going to be a nice failed auction, and we're at the decision point here at the initial bounce high. So there is more to it, but whatever you use for your orientation points, make sure they're always the same. I know that failed auctions for this time of day are very high probability on platinum. In fact, every time I tried a momentum trade against them, that doesn't end well. So because of the probabilities and the experiential data that I've collected, I use something else. However, if you want to use slightly simpler tools, you can. It's just that I'm somebody who can take in a lot of information. I have photographic memory, which I, realize that most people don't have. But that means that I can take in a ridiculous amount of information and recall all of that. So it doesn't faze me. But not everybody will like the way I trade. So you have to find yourself, like, let's say you think that the initial balance, the way I look at the failed auctions versus sustained auctions, you like that and you want to take that in. Well, you don't have to take in all the stuff from the volume profile and overnight VWAP and the single prints and TPOs and time of day and options data and blah. You can simply just go, actually, I'm going to start using the initial balance as my orientation. That's simple enough, right? And yet it can make a huge amount of difference in your trading. But before you do anything, just make sure you go back and you test everything first in, a safe account where there's not money on the line and where you can make all the mistakes and see whether you connect to it before you actually go and trade it in your XFAs. Always, always, always test things first before you go live of any sort. So we are getting a little bit of weakness around the initial bounce high. So we'll see whether that continues. So overnight VWAP is up here. This is the open anchored VWAP. That's the next point of reference. And interestingly, that also has a little demand that is not of highest quality, but it could have a bit of a reaction. But however, if this is a true failed auction, we should have no problem getting down to the edge of the initial balance if we close the next 30-minute candle inside the initial balance. So that's something that I'm going to be looking at. And if that's the case, and if we don't have a meaningful reaction from here, I'm probably going to keep this through to COMEX open. I mean, if it gets there faster, brilliant. But if it doesn't, obviously I need to have a contingency exit strategy, which will be time-based. So I will time stop it probably about 5 minutes before we start the COMEX session. All right. I see some people are having a bit of a joke on that AI AI thing. After that explanation, I can see why the risk team therapy is a good thing. I don't get what you're saying there. Can you explain the initial balance? It's just the first hour of trading. So whatever exchange you're trading, you take the high of that range and the low of that range, that becomes your initial balance. And it can be used to figure out how the auction is doing, how the move is doing. Is it succeeding? Is it failing? Are they struggling? Like, it's really quite simple. I know that the market profile community and, has a lot of meta language stuff, but it's just to, I suppose like any system, you need to come up with some new terminology so that everybody's on the same page. But when it comes down to it, market profile is nothing more than the study of probabilities around distribution curves and the first hour of trading range. Just aiming to look at how well the move is doing. Is it doing well? Is it not doing well? So everything around it is slaved to see how the auction is doing. All of the things that we talk about, including the open interest that Hogue talks about, including the single prints, including the shapes of the profile and all that. It's all in an effort to figure out whether we have a strong auction and to be able to position ourselves in almost any type of the day. So whether it's a very strong trending day, in market profile, you have ways to find a trade and limit risk. If it's a range-bound day, they have a way of doing that too. They use the edges of the session range and the initial balance to find the best trading location for a range-bound day. If it's a failed auction to one side, that's another setup. But all of it is literally so that you see how the move is doing. That's all that it is, right? Some people are super scared of it because of, like I said, the different terminology. But once you get to know the basic terms, everything suddenly starts, falling into place. Tom Quimby says, photographic memory, what Christmas presents did you get when you were 5 years old? I can actually tell you what I got when I was 2 years old as well. When I was 5, my dad was coming back from tour and he brought suitcases and suitcases of sweets and chocolates. So that's what we got. Suitcases and suitcases of sweets. Strangely enough, I was never really into sweets, but the rest of the family was, so that's what it was. But the most thing that I remember about Christmas when I was really young, especially 5 years old, so that was the one where my dad bought an electric saxophone, painted his hair blue for some weird reason. It was probably for a show, and then decided to stick a 10 Deutschmark note on his forehead, or was it 100? I don't know, and pretend that he was a homeless busker. So that was my life. My dad was a very famous musician in former Yugoslavia, and I had a slightly different upbringing. So yeah. Ideal personal data loss limit for 150K. It's going to be down to how many trades you're doing, obviously. But since you're asking just as a general rule, I like to divide it by 10. So whatever your initial drawdown on any account, just divide that number by 10. That becomes your data loss limit. And then just fit the number of trades that you do into that. And it can be very malleable. You know, if you do 1, you can trade with a little bit more size. If you do 10 or 20, then that obviously has to be smaller size. But generally, dividing the maximum loss limit by 10 will enable you to give yourself 10 full days to properly, royally screw it up and still not be out in like 2 days. So you give yourself 10 days of complete mistakes. And, you know, some people will still blow out. Let's face it, right? But you at least don't allow yourself to dig a massive hole on day 1. You know, that to me is more important, to give yourself a little bit of a buffer on the day and to stop yourself from going completely into a massive drawdown on those first few days. So much less than what some other people will tell you. And I think it's very important with these new rules that we now have. So with the fact that they'll be limiting your combines and resets per day and per account, I think it's high time to set some risk limits in place that will work with the account balance. Because now you don't have that endless, you know, clicky reset whenever you mess it up, and you can YOLO your way to XFAs. Now, if you do multiple resets per day, you won't be able to get more, and you won't be able to get an infinite amount of combines either, active combines and active XFAs. So it's like for now, you can have up to 5 XFAs, but if you're just in combines, they're going to be limiting the amount of combines that you have too. So you can't just buy 20. That's not a thing anymore. And this is where managing your account by account balance and respecting the fact that you have 4.5K to work with in 150K, it has to come in. It's easy to scale up, guys. It's easy to scale up. What is not easy is to drag yourself out of a hole when you've dug it on the first couple of days of XFA. It's not easy, right? It's probably the worst thing you can do. So your entire experience in an XFA is not like, oh, okay, I've just, you know, I lost $100, it's okay. No, it's like, oh God, I'm 1,000 down, I've only got 1,000 left. And you add so much unnecessary stress to yourself, especially now knowing that you won't be able to get more and more and more and more resets and more combines. It really puts a different spin on things, doesn't it? Suddenly it makes you more risk aware. Suddenly you're like, well, Jesus, that's, you know, what do I do now? Well, now you size down, okay? Now you size down. What did I have 200 days ago for breakfast? Same thing that I always have. Coffee with heavy cream, or double cream as we like to call it here. Espresso, in fact. The same thing that I have every single day. I don't do breakfast. Okay, Deeyana, how was your start trading when you started? Okay, so I started in 2007. When I first started, I knew nothing about trading. I had no idea what I was doing, so I did what every other person does. I picked a random stock. In my case, it was Intel. And it was, I put like $500 in there. And I put all of it on. Like, I didn't even know there was such a thing as stop loss or anything. And I got lucky. It went up massively. So it went up to like $4,000 or something crazy. And I thought to myself, oh, this is easy, right? But the next week it fell, and then it kept falling, and then it took the 500 that I put in there too. So that was my first trade. Not great. And then for about a few months after, I was like kind of intrigued, but didn't exactly know where to go. But there was kind of like a, I suppose, silver lining that I lived in near Canary Wharf in London. Now that's like a financial area. It's referred to as Canary Wharf in the city, and that's kind of like Wall Street. a lot of banks, you know, a lot of bars as well. So I actually had a residency in one of the bars around there, and I got to meet a lot of bankers, a lot of prop traders, and obviously a lot of IT guys as well, and one of them ended up being my husband. So yeah, but we were talking to a whole bunch of traders. So at one point I was talking to somebody, we already knew each other quite well, but then he said, you know, you have this natural intelligence that half of the people in the city don't have. So, you know, if I can do it, have you looked into trading? And I'm like, yeah, but, you know, I don't know what I'm doing. It's like, and I'm a musician, you know, I'm not great at math and whatever. And he said, no, it's not necessarily math. It's patterns. So let me show you. So he cracks open his laptop and he started kind of showing me how they analyze things. And he immediately put me on the path of, you know, swing extremes. This is where your risk is the highest. This is where your risk is the lowest. This is a good trading location. This is a bad trading location. What you want to see is a very good move from an area. And immediately that got me out of the retail side of things. I got so obsessed because I saw the candlestick charts and they reminded me of music sheet. So I needed to know everything about that as soon as possible. So I got home, I started doing a ton of research, and I kept calling my friend, and we were kind of talking. We started talking about positions and euro dollar and stuff. And lo and behold, before you know it, Dee is doing a demo account. So I stayed on the demo account probably for the first 4 months just to test the stuff that he was telling me about how much to risk. And that was swing trading. Okay, it was swing trading euro dollar back in like 2008 at that point. And I actually did really well doing that. But it was a different time. We had interest rate differential between the countries that was quite sizable. So you had this thing called carry trade that was moving the currencies a lot more. And I did exceptionally well. So in the first 9 months of live trading, I managed to go from just $2,000 that I put, actually it was pounds, 2,000 pounds, to 60,000 pounds. So that was, to me, pretty good. Now we see people who can run up these accounts crazily, but I think that that's maybe sizing up too quickly. Like I've never seen, you know, let's just put it this way. There's very few people who can use very large size on very small amounts to get to where they need to, especially if that's your only income or perceived income source. You know, that's your only thing. You really want to make it, and you are sizing up like a lunatic in the hope that you're going to make it. But on the other side, the only people I've seen do that successfully is people who already have quite a lot of cash behind them and they don't care, right? Otherwise, you end up living on the breadline. So, because you blow up so many times, right? So basically, you are looking at me, you know, I don't size up. I like to control my position sizing according to account balance, and I also have a chronic illness which causes brain fog and a whole bunch of other things. So I'm probably not even able to handle the stress of trading with super high size, knowing that my risk of ruin is sky high, and still going, yeah, F it, I'm just going to do that. So I can't, you know, I'm not in that frame of mind anymore. I'm a little bit older now. Maybe when I was, you know, 27, 30, 35, I had that, you know, aggressive stance. But even so, my first account, because I was very careful with it, I only ran it up to close to $500,000 within 2.5 years. It wasn't overnight. It wasn't in 3 months. It wasn't. And I thought that was, you know, pretty quick, right? It was pretty quick. You know, take that as you will. But, you know, for the first 2 years, I did pretty well. And then I went into prop trading about 5 years later. So I continued to build that account. And then at one point I thought, well, actually, I think are pretty good at this, but also euro dollar started dying on me, and I needed to move. My skills needed to move into intraday, and I didn't know how to do that by myself, so I sought mentors, coaches, external help, and I got them in the form of a prop company that I went for apprenticeship for back in 2013. So it was a long time ago. You know, things have changed a lot. We have TopstepTV that offers all of this for free. You know, I had to pay quite a lot of money for my apprenticeship. Is gold creating a failed auction? Let me have a look. Oh, gold has failed the auction in a very tight range, so that invalidates that setup. And the failed auction is gone. I'm just going to show you quickly because I can't draw. It's going to take too much time. You have here the red box, 60, barely like 64 points for the initial bounce size. When this thing failed, it failed to such a degree where it failed completely invalidating most of the initial balance. In order to run a failed auction trade, you need to have the profit margin to the other side, because the failed auction doesn't always, in fact, most times it's not even going to go full rotation. But we at least expect 3/4 of the initial balance to be traversed after the failed auction happens. So to me, this is a trade that, unless you caught it up here at 2076, 77, there's no profit margin here. So yes, it has failed the auction, but no, this is not the best setup. So this is where you will see the selectiveness of how I do things. I need to have good profit margin. If I don't, that's a no. And it's like, whatever. I just sit it out, right? Let's go next. How do you preserve your mental capital when trading? Power naps. So staring at the charts while waiting for a setup can really drain it. Right. So I'm not drained by my mental capital does not drain while I'm looking for setups, because I know exactly what I want to see. Nor do I sit there endlessly and just wait for the setup. I have levels, right? I have the initial balance that sets at a certain time. I usually have alerts that send it to my phone when the level is there. And for the most part, if I'm not on air, I'm just, I'm doing things, right? I'm walking the dogs, I'm cooking, maybe I'm sleeping. But yeah, what does drain me is if I try to actively trade through 2 sessions. And, I used to be an athlete and stuff, but that changed with the unfortunate vaccine injury that I suffered. So I do have a chronic illness condition, which means I have limited energy. Anyways, I have energy requirements that are very, very basic, but very heavy on my body. So, taking a shower can really take it out of me. And preparing a meal from scratch, also I'm completely knackered. So for me to trade through 2 sessions, I really need to manage myself. And that means power naps. So after this, I usually go and walk the dogs, and then I will lay down and I will have a rest for an hour, hour and a half, 2 hours, and then I come back afterwards. And suddenly I'm refreshed. I actually use Yoga Nidra for those sessions. It's kind of like a combination of meditation with sleep, like how do they call it? It's too early for this. I think they call it non-sleep rest or something like that. However, I frequently find that I actually do fall asleep during my yoga nidra sessions. So I'm just like out of it for about an hour. And when I wake up, I feel like a new person. I feel like it's a new day and I can do another session. But I absolutely have to manage my energy levels in between. So yeah, maybe try a power nap. Don't sit there. Set some alerts. Try and if the sitting at the charts and waiting for the setup is what knackers you out, find a way to do it more efficiently. Okay. All right, let's see. What does residency at a bar mean? It means that the bar has hired you to play there X amount of times a week or once a week on an ongoing basis for which you get paid, right? So you effectively, let's say you have yourself, your band, or maybe a DJ that you always work with, and you two are kind of like an act, and they hire you to do every Saturday. That's a residency. So that means that every Saturday you've got work. You don't have to look for work on that Saturday. As a musician, work is not something that's guaranteed. And even when you have an agent like I did, it's still, a tour. You go away for about a year. And then, for about a month, then you come back, then you have no work for 3 months, right? And then you might get a TV show assignment or something, then that lasts for 2 months, you get paid a ton of money, then nothing for another 8 months. So, it's the life of a musician. So, having some sort of residency somewhere near your house and stuff, it does help with the income side. But I was one of the lucky ones where I reached pretty much the pinnacle of session musician work. So I was on ITV, we did Superstar, that was Andrew Lloyd Webber, Search for the New Jesus. Then we did, what else did we do? I did X Factor a couple of times in the background, so you wouldn't see me, but I was, part of the sort of a band. I did session work a lot for Head Candy, Ministry of Sound. I was their live saxophonist for probably about 5 years. Played with Rod Stewart as a session gig for a couple months. So yeah, I was very, very fortunate. I know that many musicians never get to that point, so yeah. Hi Dee, do you think seeing leaderboards on TopstepTV is a help or a hindrance for a fairly new trader? I think it's a hindrance, I will be honest. I think it's a hindrance even for those of us who have been doing this for a while. Never mind for new people. The problem with a leaderboard is that you will always see people on there that are sizing up like lunatics. And even though the risk team is all like, don't do that and blah, they will still push people who have made the most money in the shortest amount of time. It's just how it is. So from that point of view, I think it's detrimental. It gives slightly unrealistic expectations, especially for very, very new traders. And it messes with your psyche because it's happened to me as well. Because, in fact, we had some pressure from the production to trade larger. They're like, we have to trade larger, we have to trade bigger. So a lot of us in the beginning of TopstepTV, we were like trying to trade larger, but some of the accounts were a little newer. So then we were getting ourselves into holes, digging holes. And that's why some of us are still not up there, because we're still sort of limping from that initial drawdown that we all suffered at the beginning of the year. So it's not easy to, constantly see people, oh yeah, this guy made 40 grand. But then there's a different side to that story. If you follow that person, very few of them actually survive. So keep that in mind when you're looking at the leaderboard, right? You see people who are like, this guy made 40 grand. And then next couple of weeks, he's on shoulder tap because Jack and Mick are ripping into him, because he then went daily loss limit, 3K, 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 3K. And then 10 days later, most of that profit is gone. Is that what we want to be doing? I hope not. I would like you guys to have smaller, consistent profits that build. And the risk team, you might not be on the leaderboard, but the risk team will be super impressed with you and they will give you more leverage. So that's where it's at. You don't just get, purse strings opened by the risk team by pulled porking it one day and then going on a daily loss limit, for all the other days. What's going to get you accolades from the risk team is if you're doing base hits. You make 350, 300, 400, 200, 350, 300, and then maybe you have a little bit of a loss, 150. And then again, 300, 400, 250, 220, 300. That builds capital in the long run. It shows them that you're not YOLOing it. It shows them you have consistency, that you're able to make profits nearly every single day. And when you don't, that you control your downside. So, you know, I had a run of like, I don't know, 17 days in October, which was crazy. And Ben actually, he was like talking about me. He was like, yeah, we have to take in the weekly P&L as well, not just like one day off, like one, and you make a lot and then nothing, but just on an account balance and account management basis across 1 week, 2 weeks, a month. That's what they're impressed with, okay? So I know that the leaderboard paints a different picture, but please keep in mind this is tradertainment, okay? There's a reason why we call it tradertainment. So we have to have that element of people making big money, them busting out, that, you know, it adds drama, it's an interesting story. Or, you know, when you see somebody who dug a massive hole and then they were down to 500 in the account, and then they had a massive day and made 20K, and they're suddenly back up. That's good TV, but that's not how you should strive to trade. At least that's my take on it. I'm very truthful, you know, sometimes to my own detriment, many times to my own detriment. But you know, there is definitely a level of you know, drama, intrigue, following people who are up and down, like one of my coaches would say, like the horse drawers, which I think is quite funny. But it's good TV. Yeah, it's good TV. Do you need to aspire to be on the leaderboard? Absolutely not. You do you. Do not look at the leaderboard. In fact, what I do now, I just switch off completely. Even if I'm on, like, you know, on fast markets or something and we're talking about the leaderboard, I would just be like, kind of like, la, la, la. I can't hear it. It doesn't exist. Because it's, you know, it is detrimental for anyone's mental capital. I pay for live data on TradingView and I'm noticing a difference in X recently on lower time frames. Yeah, especially if it's micros versus full. They will be different. They are not the same in sim as they are on live. So keep that in mind, guys. This is why we say live trading different than, you know, sim trading. Different fills, different moves, different everything. It's not like completely different, but there is a difference. You will definitely notice a bit of a lag between micros and minis. You will notice the fills are not as quick, so you click, and sometimes you have to wait, especially on some of these products that are thin, and they only have like 1 to 3 units per contract. That's low liquidity. So if you want to execute, like for example, if I now wanted to execute a 10 lot, I would have to scale into that because I don't have enough orders there. There isn't enough counterparty orders, you know, to take the opposite side to my trade, if that makes sense. So the liquidity is not there, and therefore I would have to do maybe 1, 2, maybe 4, another 3, you know, just scaling in. That's where scaling in comes from. It doesn't come from you massively scaling in 100% of your position at a time. It comes from having to partial a position in order to full an entire position, okay? What are my settings for the DMI? I have them on a very quick setting of 5 and 10. So here they are. And what I'm looking for is not for a continued move in the same direction that DMI is going to continuously show me. No, I'm just looking for a burst of a turnaround and a momentum away from my level. What happens after is down to my eyes, not down to DMI. So I have a very different way of using the lagging indicators. So for example, let's go down to 100 tick charts. For example, when this rise was happening, I could tell that it's not the strongest because the DMI was not showing you a strong move, right? It just started falling. So I'm like, okay, so this is still not a big momentum push upside. Let's try short because that's what my levels were telling me. I have GEX1 right at 960. I have ADR low that was exceeded earlier in the day that I used as a back test for a bounce. And now I do still want to look for that continuation. But for now, everything's pretty flat. So, so I wait. How long have I been trading? I've been trading for 17 years. 12 years out of that, I've been trading futures. So a long time, comparatively. Not as long as some. We have Hogue. He's been trading for 40 years. But, it's long enough. So basically from 2007, 2008. Do you prefer tick charts over minute charts? It doesn't matter. Or you take both into consideration. For me, I take both. A 100 tick chart for me is just to measure the amount of momentum that we are having around a level and then how well the trade is doing. But when it comes to the initial, well, it also depends on the type of the setup. If it's a momentum setup, I will effectively just look for a breakout, and then I want to see the 100 tick chart stay below the ribbon or above the ribbon. And if that's gone, I'm gone too. So when it's a reversal trade, I prefer the 15 and 30 minute charts, and I will also look at 3 and 4 hour charts to make sure we are in the kind of an area that could give me that larger momentum trade. Reversal, mean reversion, anything of the sort. If I don't get that, like right now we're not getting anything, and I'm actually considering of closing this out as soon as the stream is over, but let's give it until, since I'm still here, I'm going to give it until another 15 minutes to see how they want to finish this candle on a 30-minute chart. So again, now that I'm working from a larger time frame because this is slower. This has the potential to last for a couple of hours, even 3 or 4 hours as a trade. So I'm not rushing here. It's and again, if I lose it, it's fine. Again, going back to that 43% accuracy on average over very large sample sizes and periods. And it's, it's just something that I'm very comfortable with, larger risk reward, slightly lower accuracy, and looking for 3 to 5 trades per day across different instruments, depending on how it all sets up. But yeah, I use both personally. I saw somebody ask me about makeup tips. Who do I get makeup tips from? I learned how to do my makeup from makeup artists when I was a musician. And my makeup, for what it's worth, is actually pretty simple. But I am decent at it, I would say. So, yeah. However, my makeup is very similar. I use the same colors, the same. It's a bit boring, actually. I can literally do it in like 5 minutes flat. So it's funny you say that. One time when we were starting these, we were deciding what time we were going to run the London session. And I said I want to run it a little bit later because of the setups that come at the time. I never really trade the Open. Very, very rarely will you see me actually plow in a trade for the London Open. So I said, let's run it 90 minutes into it. And then people are like, why is it 90 minutes into it? And somebody said, it's because she needs to put her makeup on. Like, how much of an ugg bug do you think I am? And it's like, I don't need that much makeup. I just need a little bit so that I don't, so that I'm not pale. But yeah, I literally take 5 minutes. It's really not that big of a deal. It's a bit of eyeshadow, a bit of mascara, slight shading, and done. About the lockout feature, if you lock London section, it will intersect well with the New York section. Yes, so do not do that if you I don't know what they've done. I haven't had a chance to look at it. If you're locking up anything, lock it up by the hours or minutes. Don't lock it up with like, oh, I'm locking up the London session. Because the London session, there's an overlap. Well, this is why I call it the overlap, because we are overlapping with the cash session. So if you lock up the London session, it's not going to allow you to trade until London is over, which is 11:30 a.m. Central, I think. 11, 12, 1, 2, 3, 4. Or is it 10:30? I don't know. But basically it's 4:30 p.m. London, right? So whatever that is in Central Time. I think it's... Is it? I don't know. Anyways, there's like Savvy Time Converter that you can look that up on. So yeah, it's going to lock you up completely until New York lunchtime. And then what? You're going to trade the last part of the session, yeah, fair enough. But if you like to trade before then, it's very likely that it will lock you out for the entirety of the London session. So don't do that. If you want to lock yourself out up to the cash session, count how many hours or minutes that is, and then use the other hour and minute feature. My first job in 1989 was fitting new telecoms kit in the stock exchange in London. I was shown the viewing gallery and have wanted to be a trader ever since. Trader bonus week in the city pubs. Yeah, absolutely. So they took us, when I worked for the European side of First New York over here, they took us to LME, London Metal Exchange, and I was really shocked at how not loud it was, like so weird. We've all seen the American movies, we've all seen Hogue and Padak and Eddie talk about how violent it all was, and then that's what I was expecting. So we went up to the gallery, and there was this like circle, it's a circular area where there was like maybe about 8 people in jackets, and then they all sat down. And I was like, okay, so when is the trading going to start? And they're like, oh, no, they're trading. And I kid you not the woman, there was a woman there as well. She was sat down. And the LME, I don't know whether you know how it works, but basically all metals, individual metals are traded in 5-minute increments. And then they have this thing called the curb trading when all metals are traded for 10 minutes. And then the same thing repeats after a lunchtime break. But basically the woman has sat down in the circle with a few other people as well, and there's like copper on the screen, and she just goes like this, and I was like, what are they doing? and you know, the guide was like, oh no, they're trading. And I'm like, oh, so no shoving and spitting in people's hair and stuff? Well, that's a bit disappointing. And they were like, no, this is the LME, this is very different. And I'm like, okay. And I know that Life Exchange wasn't like that. Life Exchange was like the same way as you see in the movies, and what our lovely older mentors are explaining. So yeah, it was quite funny to see such a different world, and yet it's still a stock exchange, but they were so demure, very English, So yeah, it's funny. All right, let's see what happens here. That's where the time war happens, okay? Yeah. Right, let's see whether we have any more things. I'm gonna wait and see what happens with this trade. So maybe we can sit here and wait and see how this next 30-minute candle finishes. Because right now we're still above the initial balance, but it's kind of neither here nor there. Like, we're still getting some sellers stepping in every time we try to go higher. I would like to see some more orders build up to the downside. And usually if you get like a 20 lot or something sitting lower, that means they're going to hunt that. It's going to go lower. It sort of gives you a bit of a directional bias. But for now, Christ, it's all very, very slow. It's like 10 here, 12 here. I don't know. So yeah, I'm going to give it a little bit more time just because everything is so slow right now. And I don't quite have yet enough information to make a decision to definitely close this, because I still think there's weakness here. This just looks like they are drifting. It's almost like a staircase formation, and we keep making lower highs. So until that changes, I don't want to close this, basically. So I think it can still make up its mind and actually go lower. But it definitely has a pattern, doesn't it? So it makes a lower high, makes a lower low, goes up, tests supply, makes another lower high, moves away, this was a higher low. But until that structure breaks, there's nothing for me to do. So I have to sit here and be patient. Amos says, I'm pretty new to Topstep and I can't seem to be able to get that multi-chart setup. Oh, yeah, okay, so if you go here, select layout, you have one chart setup, 2, 3, 3 horizontal, 3 vertical, 1 to the left, 2 on the right. So just pick whichever setup you want, but that's where it is. So look for select layout above the chart. So try that. Let me know if that works. Tom Quimby says, you want to see Manic Trading, visit an investment bank trading room. Yeah, my husband worked in Barclays Capital front office, actually. So we have seen that. It's madness. It's crazy. They were doing systems, because he's a software architect. So he was doing systems where they were trying to get all the data, and successfully doing so, between Singapore and New York and London, to do like lightning fast conversions and stuff. It was like craziness. Very, very different worlds, though. Prompt traders, I see us kind of like cowboys of the financial world. We're like, locals and market makers. It's like, yeah, let's get some trading in. Top right of top chart is a window icon just left of default on Dee's window. Yeah, so there's default, and then it's left to that. So select layout. Anyone know if new traders can still get XFA accounts? Yeah, so Davida, nothing is impacted if you don't have a live account. Well, there's some things that will impact you. Like, for example, endless amount of resets and whole bunch of combines open, active combines, that's going away. So they are not allowing you to do, 20 combines and reset 5 times a day. Things like that, which is actually a good thing, right? You're not supposed to be doing that. That's like gamifying the whole industry. So that's why they've decided to put a bit of a limit on what you're doing there, right? But if you don't have a live account, and let's say you blow out of your XFA, you can get more combines, yes, just not 20 of them, 100, multiple resets continuously throughout the day, which is something that people do, believe it or not. So as long as you're not doing that, yes, there's very little change from your perspective. Get a new combine, pass it, trade your XFAs. If you blow out, you can get more. It's just for those of us who are in the live accounts, right? We're in live. They don't want us to trade endless XFAs because there's a reason why we're in live. And they just want to remove risk to the company, but also to help the trader get to the next level, which is more realistic. And eventually, you can go into your personal brokerage. It's going to be much more realistic trading one live account from Topstep than trading 5 different XFAs copy traded, and with perfect fills, no problems with the number of orders ever. Everything working out at the click of a button. You're never waiting to go into an order. That's unrealistic, right? So, some people who have only been sim traders, they have some... It'll be interesting, let's put it that way. Right? Working and lurking, that's good, yes. Alexander S. Saying, try Wim Hof breathing, it may help you with your energy. Okay, so I have a central nervous system damage, which means that if I try the Wim Hof, I actually crash. So thank you for your concern and thank you for your suggestion, but do not think that in 3 years that I've been sick, that I haven't tried all of that. I have exhausted every possible avenue of breathing and whatever. The problem is that I have brain inflammation and central nervous system damage from an extended shingles attack that was caused by a vaccine. And the doctors wouldn't see me, wouldn't believe me. Basically, at the time, it was around about COVID lockdowns. And what happened is that they just, unless you were imminently dying, they wouldn't see you. They wouldn't prescribe medications, they wouldn't see you, and they just dismissed me completely, left me like that for 3 months. It was the most painful and most challenging time in my life, because I've never been in hospital. I'm super healthy outside of what's happened to me in the last 3 years. So that was a very difficult thing for me. I mean, getting a flu, I was distraught, right? Never mind an actual problem that caused me a lot of pain throughout the body. And eventually I ended up with damage, right? Because they wouldn't help me. Now, at that point, they did help me. They put me on some medications, a lot of them, but it was too late, unfortunately. So now I'm dealing with a central nervous system damage that is recovering very slowly, because I'm here, I'm working, I'm able to do a few hours work without serious consequences. But it's slow, guys, like it's so slow. So it's basically taken me 3 years to get from nearly bedridden to being able to do a few hours work a day. But I am recovering, I am recovering. However, like I said, do not think for a second that Dee, resourceful Dee, didn't spend every ounce of available energy to do her own research. I tried Wim Hof. I tried the parent technique. I tried Joe Dispenza stuff. I tried all the kind of hippie moments. Didn't help at all. It actually made me crash. And then I tried the graded exercise therapy. Crashed even more, pushed me deeper into dysfunction. Whole bunch of stuff, guys. Let's not even get into it. But important thing is I am recovering. So, yeah. All right, guys, let's finish it up. I mean, I don't think this is going anywhere in my direction anyways. I am going to leave it. So I'm going to commit to the stop loss here. If I get stopped out, I get stopped out. It's all a part of the system and expectancy. So I'm not freaking out because it's such a small position anyway. So yeah, I'm going to take a break after this, especially if this one doesn't work out. And then maybe come back to see whether there are any more opportunities later on in the day. If not, I'm going to lock it up at $175 plus minus whatever, well, it's going to be plus whatever the commissions are. And yeah, that would be my Monday basically. So no freaking out, just, keep the losses on Mondays fairly tight. And, the frequency of trades, not too much, because it is Monday. We have a whole week to do stuff. And, well, not a whole week because it's a short week. So we're only doing 3 days because you guys have Thanksgiving. So we aren't going to have Thursday and Friday off. Let me see if I've got anything else here. But I think we are done. All right, I'm gonna bounce. Have a good day, everyone. Trade safe. Try to implement those percentages that we were talking about at the beginning of the stream. So no more than about 3 to 5% per trade, and then the larger the account gets, the less risk you should be using. So certainly not 5. So maybe start with 4 or 5, and then lower that to 2 or 3. Remember to use the risk based on the available maximum loss limit or the available risk balance, account balance that you currently have in your trade. If you're going to take a payout, consider how much money you're going to leave for working capital. So if there isn't that much in there, let's say you made 1,500 over a week and you have 5 days over 200, you want to take out 50%. Well, what's that going to do for your maximum loss limit? Is going to leave you with nothing. So you can either size down or maybe consider not taking 50%, take 20 or 30%. That's an option too, right? We don't have to go 50% every single time. All right, guys, thank you for hanging with me. Press the like, press subscribe. I will see you again tomorrow. And let's do this all over again tomorrow, looking for some setups while we wait for DAX to come in. But I see they've unfortunately moved it to February. So it is what it is. We carry on. Platinum and copper are an option. However, copper is rolling, so be careful with that. Anyways, guys, like I said, I'm going to stop talking now. This is TopstepTV London session. I'm Deeyana Angelo. See you tomorrow. Take care.